the outbreak under control. As of now, China is opening up its economy, which seems on track to reverse the steep contraction of 6% in 2020's first quarter and to resume a respectable level of growth. China has reported positive economic numbers from factory surveys, and electricity consumption has been rising, pieces of hard data that indicate a relatively fast recovery. More generally, the East has fared better with COVID-19 than has the West. To give one remarkable statistic, as of early May, the total number of COVID-19 deaths just in New York State, with a population of around 19.4 million, tops reported deaths from the virus from the entire rest of the world. There could be any number of explanations, from the East's greater prior experience dealing with viruses, to better managed healthcare systems, to cultural norms, to the possibility that the West may have been hit with a more virulent viral strain. The bottom line, however, is that China, along with the East in general, seems better positioned to get on its feet and pick up from where it left off. And while economic weakness in the West impacts China, also true is that China is less dependent on Western markets than in the past. A specific effect of the pandemic I needed to consider was the unprecedented crash in oil prices as demand cratered and as Saudi Arabia and Russia, for a time, pumped all out in an effort to gain market share. At the low point in March, oil prices actually were negative, meaning that sellers had to pay buyers to take the oil off their hands. Does this mean that the scarcities in oil and other commodities that I discuss in chapters 7 and 8, and that I expect to contribute to gold's rise, no longer will occur? I wouldn't draw that conclusion. It may take somewhat longer, but I expect that the underlying trends that I identified will start to emerge as the East looks past the pandemic. There's no reason to think that China will suddenly abandon its Belt and Road Initiative or stop seeking to link and create markets in emerging economies, a major driver of rising demand for commodities. Moreover, now China may offer emerging economies the added attraction of funding health infrastructure creation. Meanwhile, the West, economically weakened, may have a lessened ability to offer itself as a counter to China in countries in the emerging world. The crash in oil also may seal the fate of the U.S. fracking industry sooner than otherwise. As I discuss in Chapter 9, fracking always was a misguided sideshow, and even with oil prices at $50 a barrel, the industry had never managed to be cash positive. Now the crash in prices has driven some frackers out of business. The upshot is that on the other side of the pandemic, U.S. production will likely drop, significantly reducing global supply. Relatedly, the dramatic drop in oil prices has forced every major oil company to put capital expenditures on future production on hold, and one of the two major offshore drilling companies has gone bankrupt. This could mean less oil from offshore sources, which the industry generally considers to contain the largest incremental supply. There's more to say about oil. In Chapter 11, I discuss China's establishment of an Eastern oil benchmark, denominated in yuan, as a stepping stone to the new monetary reserve system China intends to engineer. The plunge in oil prices has made China more important than ever to Saudi Arabia, with the Saudis almost surely now more open to trading oil for yuan. Anything that weakens the long-standing connection between the dollar and oil, which for decades helped keep the dollar as the world's primary reserve currency, strengthens China's hand in creating a new reserve currency. Also worth noting, in April, as the pandemic was locking up much of the rest of the world, China was testing a digital currency. As I discuss in Chapter 12, a digital currency will be crucial to a new reserve system. More generally, the U.S. response to the pandemic may well have bolstered the perception of China and other Eastern countries that it is not in their interest for the dollar to continue as the world's dominant reserve currency. The extraordinary money printing the pandemic unleashed has flooded the United States and the world with dollars. This undermines the very idea of a reserve currency, which is supposed to be something that can allocate scarcities among goods. It reinforces what China saw in 2008 to 2009, when at first there weren't enough dollars to go around and then there were far too many. One unfortunate effect of the pandemic has been to sharply intensify the hostility between the United States and China. Both countries seem to be ever more in the throes of heightened nationalistic fervor and attempts to blame the other for the pandemic and much else. I already had bemoaned the emergence of a new Cold War mentality that increasingly seemed to dictate how the United States was viewing China. I saw this as squandering the best chance to meet the existential issues the world faces this century, and moreover,